I've got a trivia question for you. Let's see how good your prognostication is in a different area. Okay.
Okay.
So
Tom Cruise.
no, we're not going movies because that's too easy for you. We're going to talk about the cost of producing and distributing a penny.
A penny?
How much do you think it costs to produce and distribute a penny?
So I'm going to give you the two answers. The first one is going to be more than a penny, which is
Okay,
the important answer.
that is correct. You get
I'm also,
fraction of a point.
yeah, so I'm going to help my next answer by saying it's going to be less than a nickel.
You're going to give me a specific number or just that's it between 1 and 5? I wasn't looking for a range.
No, you wanted a specific figure, I assume.
The answer is got 2 decimal places. So I'd love to see how close you are with 2 decimal places.
It's got to be less than a nickel. Oh my God, don't tell me it's more than a dime. Oh God. I'll go 4 cents.
If we rounded, you're close. 3.69 cents to produce a penny.
Ah, man.
Pretty close. Okay, now a nickel.
That was pretty damn good.
How much does it cost to produce a nickel?
I'm gonna go with 4 cents again. I'm gonna say we start making money at a nickel. Still?
No. Unfortunately, nickels cost 13.78 cents.
It costs more than a dime to make a nickel?
Almost 3 times as much to make a nickel as a nickel costs. The good news is dimes, quarters, and half dollars still cost less than their actual value.
Wow. Elon's gonna be all over this. Doge is gonna be all over this.
Who needs nickels and pennies? I don't understand it.
I'm pretty sure that doesn't make any sense whatsoever.
What doesn't make sense?
That we actually produce coins that cost more to produce than what they're worth.
Well, it says the reason is because of zinc and nickel prices have gone up. So stop hoarding zinc and nickel, and maybe we can actually make some money off these.
Yeah, but how long were they break even 6 months ago? I doubt it.
So a penny was less than 1 cent in 2001. In 23 years, it zoomed from less than 1 cent to 3.69 cents. This is like watching the USPS, right? It's just like a slow burn. That's just someone's got to change something up. We want to start it. Lead us off. Lead us to the promised land, sir.
All right, welcome to episode 65, unbelievably, of Talk Your Chart. Today is February 4th of 2025. I am Marco Segrera here with Brett Horowitz. Have y'all ever heard of MicroStrategy, the wonderful firm run by Michael Saylor that's turned into a leveraged Bitcoin play? I've had a couple of clients just ask what the heck is going on. It feels even more speculative than other speculative things do, right? So anyways, this is just a little chart of what MicroStrategy has done since 2020, so the last 5 years. And it is off all-time highs, but it is up over 2,000% over this last 5-year period, which translates into an annualized rate of return of 87%. Good for you if you bought this thing. Good for you, good for Michael Saylor. Can the party continue? I have no idea. Does it seem like this party will continue? Probably not, because not only is this a kind of a play on a speculative asset, it's a leveraged play on a speculative asset. And I did 7 to 8 minutes of reading on the convertible note thing that he put out for the company. So yeah, you can buy the stock, or you can buy their convertible notes that turn to their stock at a certain level, or you can just buy Bitcoin. But I think it's incredible what's happened. And the reason why I brought this up, BH, in the next little photo here is not even a chart. Look who just landed on the cover of Forbes, the Bitcoin alchemist, Michael Saylor. Good for him.
This stock, though, must have been doing something else before this, because when I look back at its history, it was around in the late 90s. It looked like it was a nice internet darling, because in 2000, it has this upward revision from like nothing all the way to a gigantic number, and then all the way back down again after that, and has literally done nothing since 2000 until it started this rise in the last couple of years. So Bitcoin wasn't around in the 90s, so this must have done something before then.
Yeah, he was consultant CEO. It was business intelligence and software. So I think to your point, did it literally tread water for that long?
Yes.
Nice.
I mean, it might have been up a little bit. I mean, the chart shows a little bit of an increase, but not much. From 2000 to 2020, it was barely positive.
Yeah. Okay. Yeah. So it was consulting until it turned into a Bitcoin play. To be fair, and this little piece that I pulled from our friend Ed Yardeni is obviously showing the folks that were on the cover of Forbes that didn't work out so well for those folks. I'm sure there are plenty of covers that have pictures of folks that have done wonderfully. More little kind of poking the bear here. Michael Saylor, he's fun to listen to. Clearly a thoughtful guy. Perhaps would be a fun dude to grab a beer with. But I don't think too much of my balance sheet will be headed to MicroStrategy.
I mean, do they have any profits, any earnings?
Nothing that would support the valuation that they currently have, right? So they have $50 million in revenue, something like that. Don't quote me on that figure. But when you're valued at,
I'm going to say something very controversial. I will take the S&P 500 over this stock.
but if you did that 5 years ago, you wouldn't have looked very good.
If I did it 20 years ago, I would have looked really good. It's okay. I'll get them in the long run. This is tortoise and the hare. You want to be the hare? I'll be the tortoise.
I know. I get it. What's the market cap of this thing?
Too much.
Yeah, it's $78 billion. I'm looking at the financials for you. Yeah, it's running at a net operating loss.
Okay, yeah, perfect company that I want to invest in.
It's
Find
fun,
me a
Forbes.
company that loses money and is very expensive. Sold.
We're not haters here. Michael Saylor, keep doing your thing, my friend.
Yeah, look, maybe at some point it'll turn into something huge. I mean, Nvidia did.
Don't you dare compare MicroStrategy and Nvidia. Pick your next chart.
I'm just saying Nvidia went a long time where its stock looked very similar. It did nothing, and then it simply exploded. It sometimes can grow into a big
Yeah, but
company.
it exploded on the back of a ton of revenue growth.
Yeah, Amazon too.
Yeah, I know. MicroStrategy did not do that. It exploded on the back of Bitcoin going up.
No, the story's not fully written yet. Let's talk about oil, of which we determined there are 22 types of oil, but we're here talking about the oil you put in your car. I was surprised, and oil's been getting a lot in the news recently because I know Mr. Trump wants us to produce more oil, decrease the price of oil. That will help with inflation. But I was surprised to read this. But in 1977, Jimmy Carter talked about the warning us about the danger of energy dependence, that demand was soaring. We couldn't possibly keep up. And in last year, this production of oil hit a record high 13.4 million barrels a day. And interestingly enough, here's the part that I wasn't aware of. The U.S. has been consistently producing more crude oil than any nation in history for the last 6 years, after overtaking Russia as the world's top producer in 2018 and becoming a net exporter of oil in 2019. So
energy independence is where it's at, my friend.
Yeah, from what I read, it's the oil companies do not want to produce that much more because that would mean the prices are going to drop. They tried this a few years ago when prices got creamed and you had a lot of people that went out of business. It doesn't look like OPEC really wants to produce much more. They're happy with the price that oil's at $70 range right now. I don't really hear a lot of people complaining about the price of oil. It certainly has been a lot higher in our life. Good, go for the U.S. for shale and for fracking and all that just led to this boom in oil production.
Yeah, the shale revolution, that's 09 to 19, basically. So that's, I think, what was it, 5 million barrels to 13 per day? If you believe that the AI thing is going to turn into something productive, energy is going to be the finite resource and the one that we need an abundance of. So whoever wins the energy game is going to win the next revolution. But you need cheaper amounts of energy. Again, a lot of the folks who I prefer to listen to that are not, they don't have a political tilt to it. It's more an economic tilt to it, which I end up preferring just because it's looking at just the facts of the past 20 years and then talking about the potential facts for the next 20 years. China's per kilowatt hour cost of energy is lower than ours by a good measure. But what we want to happen in the US, I believe, is over the next 20 years to do what China was able to do to the cost of a single kilowatt hour of energy, right? So if we can get that, got to do it, but it's going to take green energy, it's going to take shale, it's going to take drilling, and it's going to take nuclear also, right? So,
or we just tariff the heck out of them, raise their prices, and suddenly we're more competitive.
You think so?
No, but I think that's what the administration wants to do.
No, that it's a noisy thing. Can you just do me a favor? Can you just take a nap for 4 years, wake up in 4 years, and then it'll be all good, right? That's what I'm going to do.
I wish it was that easier.
All right, what else do you have here?
So Capital One, real fast. I got a chart here of Capital One's stock price over the last few years. Why do I put that in there? We talked about this a few months ago, maybe a year ago, about Capital One misleading customers. They got sued big time the other day. They had set up something in order of like 8 different money market and savings accounts with different rates. They kept changing the name. They would not change the rate that people were getting or telling people that there was a higher paying savings account. They had some that were paying 0.5%. They would change that to a higher rate, wouldn't tell people. And now new ones are paying almost 4%. So people sued. As I look at this chart, to me, what does it say? That's the cost of doing business. Do it all day long. You get a little slap on the wrist. You make a lot of money. Okay, no more political talk. Moving on.
It'll turn. Do you bank with Capital One?
I did have an account there, and I want to get out of Capital One.
All right, what else?
Go for it. You're next.
All right, my last one. The 10-year Treasury. So, gosh, I don't know. There's so many indicators that you can look at that kind of are helpful leading indicators or lagging indicators or anything like that. What I just keep looking at, and I'm not sure, I guess it's just the interest rates. I'm a little bit of the prisoner of the moment here. Let me ask you this. Pre-2020, right, the preceding 10 years, did you care about interest rates as much as everybody cares about interest rates right now?
No. Well, I think you cared about them. The fact if you were a saver, you hoped at some point they'd go up. But for most of people that had loans, no, you didn't care about them. They were low.
Yeah. I think that must have been, they were so low you didn't care. I just feel like everyone is a macro strategist now. And before anyone's kind of making a decision, they want to know where the 10-year Treasury is, which is just kind of funny to me. It matters, but you're not putting together a mezzanine loan for a financial institution and $100 million commercial piece of property. Those guys, I understand why they care about the 10-year, but it's like I'm at a dinner and we're talking about the 10-year Treasury and I didn't bring it up. It's kind of funny.
What kind of dinners are you having? That's what I got to understand.
Well, when Jerry Powell wants to have dinner, Brett, you go. Oh. The 10-year Treasury is going to matter a lot simply because $880 billion of our budget is going to service interest costs. That's the second largest expense. I think if we end up, and forget I think, based off what I listen to and what I read, something breaks if we get to 5.5% on the 10-year, right? I'm not making some prognostication. It just sounds like the folks who are watching at 5.5% for something to break. And I bring that up because everyone's kind of asking, oh, are we due this year for a correction? And it's like, sure, you should be due every single year for about a 15% drawdown. We haven't seen that since 2022, though.
Didn't you predict on our last episode that the 10-year would hit 5.5 during this year?
Yeah, you were down a point. I'm at 4.6. Yeah. So again, who the heck knows? Because they said the same thing, perhaps not as egregiously, but they said similar stories about the 5%, which we hit in October of 23. Then we got as low as, what is this, 3.7? Yeah, 3.6, 3.7, September of 24. And now we've flown up to 4.5. And all this tariff talk, rates are kind of staying pat. So
that's because no one knows what the heck is going to happen. It changes every single day from day to day.
Well, of course, that's the whole point. But if you're trying to do what I would consider a silly thing, which is compare yourself to what the short-term traders are doing, they're paying attention to the 10-year Treasury. They're looking at that as a signal for what may happen over the next 12 months, because you can't use valuation for the next 12 months because, that's completely useless. For that little rodeo fund where you're trying to dial a fun position, a fun little buy, I like using the 10-year Treasury because that's what everyone is talking about. And there's so much more that you can read around that than I think has ever been in press since I've been in this business and the 15 years before that. No one's cared more about the 10-year Treasury and macro than today.
I think it can just as easily go to 5.5 than it can go down to 3.5. Like, I wouldn't be surprised if either one happens this year.
I agree that the next 1% move could more likely be up than down. And that's precisely why I think it's down instead of up. Have you seen the bull bear indicator, the asset allocation piece? Investors Daily, whatever it is, that tests the market out to see, okay, what's the sentiment? Are you bull on or bear on? And right now it's bear on, which is a counter indicator. So that tells you there's room to run. So anyways, I'm having an interesting time looking at the 10-year Treasury, but in reality, more so because $880 billion is a lot. And if we want to get rid of this $2 trillion annual deficit, it's going to be much harder to do if the 10-year Treasury is trending in the what I would call the wrong direction.
Last chart here, we're talking about employment. There's a number of companies now that are trying to get their employees to come back to the office. And instead of quiet quitting, right, where workers are slacking off, they're now replacing this with quiet cutting, where employers are actually cutting jobs without announcing job cuts because they're forcing employees to come back to the office. and employees don't want to come back to the office. So we talked about this last few years. Unemployment had hit 3.4% a few years ago, the lowest in 50 years. It's now back up to 4.1. Nothing crazy, but it's increasing. And one topic we talked about several times was the ratio of vacant jobs to jobless workers was a record 2. In other words, 2 vacant jobs to every 1 jobless worker. That's now down to 1.1. It's fallen in by half.
It's incredible.
Right now, the job space is looking pretty good. Pretty good. It is to the point now, job reports come out, they're stronger than they can be again and again and again. Every once in a while, there's a soft report, but it's like, this is great. Great news.
And manufacturing numbers are strong. That's why there's an upside risk to inflation, just because the economy is doing so damn well. And of course, it's interesting when you look at inflation expectations by political party, it's very strange. Republicans think it's coming down, Democrats think it's going up.
Everything's way too political these days. I don't know why every topic becomes a partisan topic.
I know. That's why you got to control your inputs, man. All right,
we're done.
Perfect timing. You owe me a bottle of extra virgin olive oil.
Okay. I'll get you one when we go to Portugal.
And last little bit, for anyone who cares about U.S. Treasury bill and bond auctions, that matters too. Why is the 10-year Treasury up after the Fed has cut?
Because the 10-year is not tied to the Fed. It's tied to long-term growth and inflation expectations.
Just wait till the next episode when I bring you a chart about the correlation that existed up until the last time this happened. Until then, listener.
Part 2 coming up. We done ... Stay tuned.